real estate, because on a weekly basis, when I open the papers, to read out news, you hear about various big stock market investors going ahead and buying bigger apartments, and the theme is clearly that in the longer run, equity markets will do well. But in the near term, it seems, there is quite a bit of money moving to actual houses, and not small houses, quite large ones. So how do you play this theme, if you think it has more headroom? And for this month, actually, the index has been an underperformer, but over the last 1 year, the real estate index itself has done very, very well. Please go ahead.
Yeah, I think this is one of the themes which we are very hot on. And in fact, we have a significant overweight on real estate in our model portfolio. See, what has happened is for more than a decade, this sector has remained stagnant. After 2008-9 boom, you've seen the sector pretty much doing nothing over the next 11-12 years. It's only in 2020-21 that things have started looking up. And then in the last 2-3 years, the data that you have seen, for the companies which are in the listed domain, and of course for the companies that we cover, we have constantly seen upgrades coming in for pre-sales and all. Now, if you look at the real estate cycle, typically cycles don't get over in 2-3 years. So our view is that there is far more durability to the cycle than what we have seen in the past. One key difference that we are seeing in specific micro markets is that developers are far more calibrated today in taking prices up in the big cities compared to the earlier cycles where we have seen developers become greedy too early into the cycle. So our view is that the durability of this real estate, and for that matter even hotels, the cycle is much higher this time, much longer, going to last much longer in our view. And that's why we have about 3 to 4 real estate stocks in our model portfolio. So we think that within the broad domestic cyclical segment, this is one of the very prominent sector, and we think that the amount of wealth creation that one can see through in this space in the foreseeable future, we can still compound quite well, despite the fact that the last 2 years has already been very good for the real estate index particularly. In our model portfolio, if you see, we have stocks like Godrej Properties, Shobha, Sensex, some of those names, which are like cumulatively they add up to about 4% weight in our model portfolio versus almost a zero allocation in the benchmark.
Gautam, just to stick to that point about real estate, because it's sort of, all around us, right? And there are transactions happen and you talk to people, etc. In Bombay, for example, where a large player like Lodha has got lots of concentration, do you think there are already... I was reading an article over the weekend which said that maybe the markets are going to get oversupplied very, very fast. And that process has already kind of started. Now, of course, branded players will do well. And over the last couple of years, we've had a situation where volumes, in terms of unit volumes have gone up and pricing has also moved up year after year. But are we, is that something to watch out for? And what will happen if pricing stalls at these levels because of the oversupply? What happens to stocks in that kind of a scenario?
So Prashant, in a sector which has a very high ticket size and which is deeply cyclical, one has to be always cognizant of some of these underlying operational parameters, whether it's demand, supply or pricing. That's why I mentioned in the beginning that one of the differences that we are observing in this cycle of real estate versus earlier is that the pace of realization increase is far more somber and calibrated in the cycle than what we have seen in the past. And therefore, the view that the durability of this cycle can be much longer. Plus, if you do the basic maths around the potential demand and potential supply over the next decade, you will still feel that despite the supply going up anywhere between 10 to 15%, the demand will still be enough for this supply to get absorbed. Now, obviously, for a sector like real estate, which is very high beta and deeply cyclical, there will be times in the next few years where sector may do nothing, and there may be deep corrections also along the way. But from a slightly longer term perspective, I think when you look at the overall forces at play, at the margin, we think that the risk reward is still very favorable in the real estate sector. Obviously, you have to do a lot of bottom up work here and figure out who are the leaders in various specific micro markets, because no one company is a leader in every micro market. So therefore, the view on individual company will always differ, despite having a very positive view on a top-down basis for the sector.
Okay, all right, Gautam, we leave it at that. Thanks a lot for joining in, and all the best for your ideation conference. We'll of course hear from you again very soon. For the market, it's not bad actually. It's flat with a bit of a positive bias. The auto stocks are really topping the charts. Eicher Motors is your top Nifty gainer and Maruti Suzuki has hit a fresh record high. But one stock that is in complete opposite direction of the market is HUL. The stock actually has been hitting a fresh 52-week low. The company plans to spin off its ice cream business. Mangalam joins in now with more details on that. Mangalam, over to you.
Well, you know, this news comes in light of the announcement that came in from Unilever PLC yesterday, where they announced a strategic intent to separate the ice cream business to create a simpler, more focused, high-performing company. And this is the statement that came in from Unilever PLC. Most of the street were worrying about what happens to the Indian ice cream business of Hindustan Unilever itself. So to that, we had written to the company and we've got their response. What they've basically said is that they are also evaluating various options in light of the announcement that is coming for from the Unilever PLC business. They will discuss all these options with HUL board and the Unilever management in the coming months. And once the approach is finalized, they will communicate details to us further itself. The reason why they do that, one is because, you know, the ice cream business is inherently a different business model, including a cold chain, go-to-market model, seasonality, and a different innovation rhythm that comes in with, you know, its own set of business practices as against Unilever's own practice. So once we get to know what their approach is, the point is that what has happened in Unilever PLC may well happen in Hindustan Unilever as well. And just for perspective, it accounts for about 3% of their revenues. So let's see where they go from there. And like you said, you know, the stock has been underperforming. The company's been focusing on making it a lot more leaner in terms of operations. So this could be one of those methods that they're doing over and above everything else as well.
Okay, thanks a lot for that. So 7,500 people will be laid off across the board in order to cut costs. I guess that is the need of the hour. Well, the first management joining us on the show today is Sonata Software. The company signed a go-to-market partnership with Zones. The partnership with Zones will focus on enterprise application delivery through end-to-end cloud-managed services. To discuss this partnership as well as more on the company, Jagannathan Chakravarti, who is the CFO of Sonata Software, joins in. Mr. Chakravarti, thanks a lot for joining in. Appreciate your time here on CNBC TV18. Can you start by telling us what is the opportunity that this partnership with Zones throws up for you? If you can explain to us both, you know, the financial opportunity that you look at and also the scope of work that you will be doing.
Good morning, all. Thanks for this opportunity. We have now entered into a partnership, go-to-market partnership with Zones. Zones is actually a market leader in giving cost optimization as well as the data efficiency for various companies, and they have presence in industry, every solution for an industry-specific industry, and they presence across the globe. Zones tie-up is going to help us to take up a larger deal to bring in the cost efficiency as well as the data optimization for our customers. We have announced about 11 large deals in the last 1.5 years period of time, and we have been pursuing about 14 large deals now. This is going to help us.
Come back to you actually in a couple of minutes. I think we're having some issue with your audio, so we'll just try and fix that because I can't hear you very well. But for the market, just wanted to mention that things are looking pretty good. It's not just auto stocks, but even now IT stocks are starting to come back. TCS is up, Wipro is in the green, L&T also from capital goods is up almost 0.5%. So overall, the market momentum is slightly picking up after the damage we've seen in the last few days, just holding on to the 21,900 mark. As I said, Maruti is a stock which has hit a fresh record high today. So that is one stock that's definitely in focus. And talking about fresh 52-week highs as well, Sapphire Foods is at a fresh 52-week high. So do keep an eye out on that. That stock is now up almost about 5.5% and big moves coming in.
You know, something like a Manappuram is also up about 3% or so. So that's got large volumes on it. GPT Health is another one which is up 6%. You'll hear from the management on GPT Health in just a bit on the other side. So that's the stock, and the other one was Manappuram. And on the downside, Tata Chemicals is the one which I think is, you know, that sharp move from 940 in that rally that we had on the back of sort of all kinds of news flow that Tata Sons will have to list, and you know, what will happen to companies like Tata Chemicals which own stakes and how they'll be, you know, you can ascribe a value to it. I mean, those gains are pretty much largely gone. So 940 is where the rally started, and it's back at about 1,064. That's a sharp cut coming through at the day's lowest point at this stage.
Okay, we'll have to take a quick commercial break actually. We'll come back with more on the markets as well as on individual stocks, and hopefully we'll get chatting with the management of Sonata Software yet again. Stay tuned. Welcome back. I think we have that line connected with Jagannathan Chakravarti, who is the CFO of Sonata Software. Mr. Chakravarti, good morning. You were telling us about the opportunity that this partnership brings to you, both in terms of a monetary opportunity as well as the scope of work. Please go ahead because, we couldn't understand what you were saying earlier. So please go ahead.
Yeah. Thanks for the time. Good morning to all. We have now tied up a go-to-market tie-up with Zone. Zones is a market leader. Industry, they have industry-specific solutions, particularly to bring the cost efficiency and data optimization for various customers in various industries. They have service platforms for those things. In a large scale for us, this involves a wide spectrum of activity for us, including the data optimization solutions and cost savings for the customer. We have been pursuing about 40 large deals with the Zone tie-up is going to help us to sweeten the offerings to the customers, and it will be easy for us. The win ratio will go up for us in the coming days because Zones have presence across the globe, and this is going to help us to win the large deals in various geos also. Particularly with the tie-up, we can also go to their customers and then take up the larger deals from our side. It will be a very good cross-selling opportunity for us in the coming year.
Okay. Can you identify any kind of financial, benefit? I mean, just trying to understand what would this mean for you in terms of a revenue opportunity, etc. I know it may be too early. Also, can you tell us what is the demand environment looking like? Is Q4, has it been better than Q3? Any trends there?
Yeah. The Zones opportunity financial, it's a little early now. Only that, as I mentioned to you, we are pursuing the large deal is going to help us to increase the win ratio. For a company like us, getting the large deals and winning more large deals is going to definitely have a financial benefit to us. We have made the models or plans internally, but it may take some time to see the benefits in the external world or external result. Now, coming to this, on both the market outlook, market is still soft. There are industries, particularly this quarter, seems to be some seasonal impacts are there. We have Quant. We have mentioned at the beginning of the quarter that it's going to be soft for Quant, which is our major acquisition and major driver for the growth. However, there are some verticals like high tech. We are seeing some green shoots. It is better than Q3. We see much better Q1 for the high tech industry, whereas the BFSI and healthcare is still soft, and it may take some more time for seeing the benefit of it. There are quarter-specific, particularly in Q2 and Q3, we had some green shoot impacts of the large deals what we have announced earlier, which is going to miss now. And there is a delay in closure of the deals. From pipeline is good. Our order book is also okay because of the large deals, which is benefit of that will come in the future. But conversion of the pipeline to the order book is actually taking more time now, at least 10-12 weeks of delay. We are seeing it. Quarter specific, it may be Q4 will be a little soft for us now. But we hope that future benefits are come.
10 to 12 week delay in terms of conversion of the pipeline into actual work, right? Into actual orders.
Yes.
That's the feedback. We'll ask you to quantify some numbers and maybe look ahead for the F525 as a whole. But I just want to pull back a little bit and ask you about the work that you're doing with Microsoft, Mr. Chakravarti. Good morning, Prashant here. An investor I was talking to was talking about that as the great excitement as far as Sonata is concerned. I mean, Microsoft, of course, there's so much happening, and Microsoft is a company which is pretty much at the center of a lot of the stuff, be it AI or all of the other new things which are going on. And Microsoft has been a long time partner for you. Could you give us an idea about the scope of work that you're doing there? What is it? And just some numbers as well. What is it as a share of the sort of earnings, and how are you leveraging that, if at all?
Yeah. So as we mentioned earlier, both sell to Microsoft and sell with Microsoft has been almost like 50-55% of our revenue. It's been there for quite some time. I have tied up with Microsoft. It's about 30 years of partnership with Microsoft. We were one of the first mid-sized companies to announce for our AI platform, Harmony.ai. We have actually now tied up that with the Azure AI also. This is actually going to help us to bring the industry-specific application. We have 6 chatbots for the specific industry, different industries. And we have also come out with the service-level platform for the specific industry. And using the Azure AI is going to help the customer to speed up the adoption of the AI. So this is it's going to be a big benefit for us. We are also part of the AI group of Microsoft, where we have a go-to-market tie-up with Microsoft, specifically in the AI side of it. We are developing the various go-to-market application and solutions for that along with them, so that we can take it to the specific industries and gain the momentum. In every proposal, what we make now, AI is part of that. Without AI, no proposal goes out to any customer at present. And we have actually developed a few of the solutions for some of the functions like financial operations, HR, marketing, and all these things. We have already developed AI solution, which we have applied to a Europe-based telecom company and got about 60-70% benefit already. They have seen the benefit already. We have also developed the chatbot for HR and for marketing solution. And these are going to help even functions to adopt the AI much in a faster way. Our AI platform is helping the customer to choose whatever is the LLM they want to do it. We have tied up in a way that it is Microsoft is specific good, but also AWS and other AI solutions, whatever LLMs are available in the market, the customer can choose that. So anything coming in now, the AI has started being part and parcels of all the solutions to the customer. But to get the momentum of revenue, we expect another 5-6 quarters it may take. But our tie-up with Microsoft is very close. We are part and parcels of their AI group, core AI group, which is actually working on go-to-market.
All right. Hi, good morning, Mr. Chakravarti. What is your current AI pipeline? I think it was around $50 million, if I remember correctly, in the last quarter. So if you could give us an updated number. And also, you have articulated that 20% from AI in 3 years. Now, not many corporates have been able to put a number to this AI opportunity. How do you arrive at this number?
Yeah, we have. Of course, internally, we will not go to market and announce it very confidently. But it will take, the momentum is going to take a little time. To be very frank with you, this is actually seeing a lot of momentum now coming in, but making it to a larger AI deal and larger solution will take a little bit more time. But we expect in 3 years' time, we should be able to reach there is our part. And the 50 million, what we mentioned was about Microsoft Fabric. Microsoft Fabric is a data platform of Microsoft, and we were one of the launch partners for them, which actually imbibed the AI solution also, and then Azure, the Connect Azure AI also application is there. For the particularly data optimization space, the AI application in data optimization along with Fabric, that has actually built almost like a $50 million of pipeline. The solution, the opportunities are plenty. Every customer wants to know about our AI offering, and every customer is looking up for definite application of the AI in their business. We are seeing quite a strong momentum in the market. To gain a larger deal and then revenue momentum, it may take a little bit more time.
No, got it. You mentioned that 55% number. When you said you buy from and sell to as well from Microsoft. That 50, it's the revenue contribution from Microsoft?
Yeah, Microsoft as a customer as well as Microsoft as a partner, because we have both with them. So that total is about 50-55% of that comes from there.
Okay, got that. And as you said, you're a part of the core AI group for Microsoft and developing go-to-market solutions in that space.
Yes,
Are there many players in India a part of that group, or are you one of the few?
we are very very closely working, and we have been the pioneers in this space with Microsoft. Our
Yeah.
partnership differentiate us from other players. Definitely, there is a differentiation.
Okay, Mr. Chakravarti, we'll leave it there. So thank you very much for your time. Appreciate you joining in and running us through that conversation and that perspective. So some delay in terms of pipeline conversion to orders, but remain very bullish and essentially calling that Microsoft partnership critical and crucial, especially at a time like this where you're looking at AI as the next big thing. Now, the next management we are speaking with is GPT Healthcare. The stock has been buzzing in trade. I was just mentioning that the stock actually today, this morning, is up about 6.5%. Let's talk about the business, occupancy, average revenue per bed, and other matrices. We are now joined by Mr. Atul Tantia, Group Chief Financial Officer at GPT Healthcare. Atul, good morning. Great to have you with us here. Thanks very much for your time. Prashant this side. Could you talk to us a little bit about how this particular quarter is panning out like? I think growth did slow down a little bit in the last quarter. We saw, I think, a bit of a decline on a quarter-on-quarter basis. What's the fourth quarter panning out like?
So the third quarter is typically a seasonally weak quarter due to the festival season. And this in 2024, the Navratri or Durga Puja in Calcutta, the West Bengal side, was in October rather than September, which was in last year, in FY23. So on a comparable basis, it is not a good comparison. Despite that, we have grown about 4.5% in Q3. Q4, we expect to grow north of 10. Expect to grow about 10 to 15%. For the full year, we expect to exceed revenue by almost 400 crores.
So, if you exceed revenue by 400 crores for the full year, what would that mean in terms of growth for FY25? If you extrapolated, what kind of growth are you looking at for FY25?
So FY25, we expect revenue growth to be in the range of about 15 to 18%.
Okay, so 15 to 18% growth is what you're looking at in FY25. Your Salt Lake Hospital and the Dum Dum Hospital have seen a fall in occupancies. I just want to understand, what was the reason for that? Of course, you mentioned some of them, but going forward as well, do you continue to see this kind of pressure?
So Salt Lake, honestly, we have commissioned a surgical robot. That surgical robot has led to good usage. We've done more than 300 surgeries from that surgical robot. If you see our ALOS or average length of stay has also fallen in Salt Lake to around 3 days compared to 4 days earlier. This leads to a lot of beds getting freed up. And we are looking at adding more specialties in the Salt Lake Hospital. We've added some gastroenterology beds as well recently in order to fill those beds up. With regard to Dum Dum, the occupancy has been around the 80% mark. The full year last year was about 82%. Even the 9 months has been around 78%. So anyways, occupancy north of 75% is a good number for any mature hospital. And we expect Dum Dum to maintain north of 75-77%.
All right. Hi, Atul. Good morning and good to see you. And Nigel on this side. Your ARPOB, I think, is in that early 30,000 odd mark, 33,000 if I'm not mistaken. How do you see this number pan out? Point number one. Point number two is, there is talk of some standardization of rates. How do you see this? What is your view on this? And do you think there could be some kind of middle ground that you all can come to?
Sure. So with respect to our ARPOB, it is around the 32,500 mark. It is a conscious call of the management to address this strata of the society, which is an aspiring population, has high disposable income, basically the middle to high income part of the society. We consciously keep our ARPOB around that mark, and we expect it to grow by almost 5 to 6% going forward due to inflation as well as change in specialty mix, etc. With respect to the standardization of rates, I think that we, as an industry, the industry body is taking a call as to what it should be. The industry is in talks with the Union Health Department as well as the various state departments to ensure that the returns on the investments are also met. We expect the government to take a conscious call due to the high investment that the industry does in this sector.
Okay, all right. And what about, if I had to give us a margin number, you're talking about growing by 15 to 18% on a base of around 400 crores approximately. So you'll be in excess of around 500 crores in the coming year. but what does it mean in terms of margins?
Sure. So A doesn't mean that we'll be in excess of 500, we'll be shy of 500. In terms of at EBITDA level, we are around the 22.7% mark for the 9 months. We expect EBITDA to be around the 23.5% going forward as well. Having said that, in FY25, we expect to commission our Raipur hospital. So the first couple of quarters for the Raipur hospital will be a negative quarter because of the initial losses. So that might lead to a slight dip in the EBITDA margin, but our other mature hospitals will kind of make that up.
So you have plans to open 150 to 200 bedded hospitals in some of the underserved markets. And as you said, your Raipur hospital will also be commissioned in Q4 of FY25. What does this mean in terms of your capex? How much are you going to be investing for these to increase the bed capacity? How would that be funded? Would that put some pressure on your balance sheet?
So post the IPO, we have a gross debt of almost 8 crores. We have used the IPO proceeds to repay the debt. So we are having debt on the balance sheet. We have almost 45 crores sitting on the balance sheet as cash and investments to fund our growth. We have a very strong cash flow to EBITDA conversion being north of 80% due to our payer mix. And this leads to us being very comfortable in terms of our growth opportunities. The Raipur hospital is on an asset-light model, so we'll be funding it mostly through internal accruals, and we'll spend around 55 crores to fund that hospital.
Okay, all right. Good speaking to you, Atul. Thanks so much for stopping by and filling us in with all of those details. Wishing you all the best in the coming year. Things to look up, going by your guidance, whether it's with regard to the average revenue per bed, the revenue growth, the margins as well, all of those factors looking up. For the time being, the street likes the numbers, and it seems they like what you said as well. The stock is up close around 6.5%. Well, no worries in terms of the headline markets. We're holding at around 21,850, but the breadth of the market actually has narrowed down. So when we started off trade, as we mentioned, the biggest positive was that we had many more stocks that were advancing in comparison to declining, but those two lines have come closer to each other. And as we speak, it's pretty much even Stevens. I think it's a good time, Sonia, to revise a couple of stocks. Eicher Motors, that's the one you alerted us about, and that's flying away as we speak.
Oh, absolutely. It is the biggest Nifty gainer right now. So the stock is up almost about 6% okay, 4% now. UBS has upgraded Eicher Motors to a buy from a neutral. They've raised their target price on the stock from 4,300 to 5,000, which is a big upside to the current market price. Now, a couple of things that they're looking at. One is they're forecasting an 18% compounded EBITDA growth between FY24 and 26. They say that the backdrop is very favorable for exports. They see continued growth in domestic demand as well. And the best part is that Eicher is trading at a big discount to some of its two-wheeler peers. So it's currently trading at a 17% discount to its overall two-wheeler peer set. It's trading at a 20% discount to names like Bajaj Auto. Now, also they talk about, this report talks about how recently there have been launches by competitors like Harley-Davidson, like Triumph, but that did not scale up meaningfully. So that threat is kind of out of the way for Eicher Motors. And this is also the start of a multi-year upgrade cycle amongst customers. So lots of positives for this stock, and hence that upgrade coming through. Stock is up about 4% right now.
Absolutely. So that's an interesting one. And from the day's high, it's come off a little bit, but still a big gainer, a strong gainer. Just a few other names, right, which are moving. Out of the blue, I mean, a name like Jayaprakash Associates is up about 17-18, at about 17-18, 4% in the green. It's got volumes, and that's the only reason to be mentioned here. Metro Brands was not there in the morning, 4.5% on Metro Brands, 1,078, 1,080 on that one. This morning, there is just sort of spotting stocks here. Mahindra Life, which is up about 2.5%. So that's another one which is looking good. Paytm, I mean, I think it's come up nicely from the recent low, which was about 334. It's moved up $100 in I think about 4 sessions flat, 4 or 5 sessions flat. Paytm, that is, of course. I mean, the low that we had in the middle of February was about 330. From 330, it went to about, the high was about 450 or so. From 450, came back to about 330, and I mean, another 100 rupee bounce here on Paytm once again. So lots of activity. Nifty is giving back some gains now, by the way. We've got about 30 points. So from off of the day's high, 21,850 is where it stands at right now. Let's talk about another name which has done well, sort of avoided the recent turmoil. largely. Shakti Pumps is the name that I'm talking about. Vamakshi is here with more details on this one. Vamakshi.
Well, absolutely, Prashant. When we look at Shakti Pumps, the stock is declining in the trading session today, and that is because the company has announced that they have launched a QIP. They're looking to raise somewhere around 200 odd crores, and the floor price for this QIP has been set at 1,272 rupees per share. Now, when we compare this floor price to the closing price yesterday, it is actually coming in at a discount of almost 7% and therefore there could be some pressure on the stock. But apart from that, more important to know that a board meeting is scheduled to happen on March 22nd to determine the issue price for this QIP. So on the back of that, keep an eye out on Shakti Pumps.
Okay, thanks a lot for that. Well, Mitesh Thakkar is back with us to talk about some stocks. By the way, the mid-cap index is starting to fall, so don't lose sight of that. Almost 200 points gone on the mid-cap index itself. And, you know, many names, tire stocks continue to see pressure. Yesterday was a weak day for tire companies. Steel stocks, Tata Steel is down 2%. Power stocks, Tata Power is down about 1.5%. Mitesh Thakkar is back with us. Mitesh, not looking too good actually for the broader markets now. This suddenly it's taken a turn for the worse. What would you do at this juncture, and especially in the mid and small cap space? Anything that stands out for you?
So I think we are seeing some selling pressure after that morning bounce back seems to have played out. So we'll, as I said, I think we will maintain a negative bias till we see 21,950 being crossed. And on the stock side, Maruti, I think, has been clearly going the other way than the markets and has given a fresh breakout. So that's a buy with a stop at about 11,650 for targets of around 12,400. And DV's lab is a recommendation on the sell side. Keep a stop about 34.50 here. Look for targets of 33.35.
No, got that. By the way, Mitesh, all the up and down on Paytm, it's a very news-related name, but anything on the charts?
See, Paytm, after a big decline, has been, trying to give a reversal from oversold levels. So I think that's the kind of move. Typically after you've had a big decline, you get some kind of a bounce back. The target which I'm looking at for Paytm is around 440, 450. If we get a closing above that, we'll look at a reversal. But I think this bounce back should see a lot of supply around this 440, 450 mark.
You had Tata Chemicals on your radar, Mitesh?
I do. I do track it. I think, today there's some kind of a negative breakdown happening after that big rally happened and then the IPO news kind of fizzled out. Today there's a big breakdown. If we get a closing below 1,075, 1,076, then I think this stock could possibly get into three digits as well. So short-term outlook is negative.
Okay. Just one more name before we let you go. Amber Enterprises, right? Big decline. High was recent high, by the way, was about 4,600. Stocks around 3,000 rupees now. Where do supports come in?
Prashant, I haven't been tracking this closely, so difficult for me to give an immediate view. But if I just give the first glance, I think it's near the support levels of around 3,000, 3,030. Only if that breaks, then I think we'll see continuation. But there could be a bounce back from these levels of around 3,000.
All right, we'll take a quick break on that note. On the other side, Manisha will be joining in with the latest from the commodity market. Stay with us. Well, shifting focus to the commodity markets, Manisha Gupta is joining in. Manisha, what's the one commodity that you're tracking today?
Well, I'm looking at the base of it all right now and the kind of reports that have come in sense of water concerns in India. Well, I'm putting a focus on some of those numbers there. So there are 150 reservoirs that the Jal Shakti watches. And at this point in time, it is at 40% of capacity. So for the month of March, the reservoirs are at the lowest level in last 5 years. We have seen, and there are various reasons for that as well. India has, nearly 18% population of the world. And when you look at the water reservoirs, we have just 4% of the water resources in the global market. So there is that need for water security and to ensure that we use it nicely. But there are various concerns really within India that we're looking at right now. Well, the concerns also involve squeezing of drinking water going forward. Irrigation, of course, is one of the major concerns there. And hydroelectric supply in the last 10 months also has seen a decline by nearly 17% in the last 10 months itself. So you are looking at concerns already building up. So when you look at the water reservoirs, and there are various states, and these are important agriculture states as well, where the water reservoirs are below 10-year average. This is Maharashtra, Andhra Pradesh, and also other states like Uttar Pradesh and Punjab as well. So when you look at the water reservoir levels, in Maharashtra, it is at 44% of capacity, but the concerns clearly coming in from Karnataka, where the water is at 16% of capacity. Major concerns happening there. We are reading all of that in major news as well. So water levels are low because of various reasons. To begin with, it was subdued and uneven monsoon that we saw in 2023. There are also reports suggesting that by 2030, India water requirement would be double of what the availability is right now. So you have to look at those numbers quite clearly. Also, there are concerns about water contamination. 70% of irrigation also depends on underground water, which is fast depleting. There have been various reports suggesting that as well. 78% of wells in Punjab are considered overexploited, and Punjab is a state which is really considered as the bread bowl of India. That is where you have 50% of rice and nearly 70% of wheat coming in from. Markets also will be watching out for the kind of summer season that we have in ahead of us. Remember, monsoons start from June, and April and May, IMD already is saying that are expected to be the heat months. So the heat wave that you will see in these couple of months until the monsoons hit in the month of June. So there are concerns that you could be looking at the next couple of months when it comes to water as an availability.
Okay, all right. Thanks a lot, Manisha, for joining us and giving us that important update on that front. Well, let's move on. Let's get chatting with the management of Ganesha Ecosphere. Remember, they went ahead and they raised some money via QIP route as well as preference issue. What do they want to use these funds for? Well, we have with us Mr. Yash Sharma, the director of the company, who joins us on the phone line. Hi, Mr. Sharma. Good morning and good to have you on the show. Well, could you give us some clarity about these funds that you've raised, 350 crores of QIP and 150 crores of preference? Could you tell us what will it be utilized for? And more interestingly, the RPET capacity that had moved from, I think, 14,000 to around 28,000. Where is that capacity headed by the end of this year?
Yeah, hi, thanks. Good morning. And first of all, thanks for having me here. So yes, we've successfully completed a QIP issue and a preferential issue totaling to around 500 crore INR rupees. And majorly, we've done this, capital raising to fund our future expansion plans and to also to have a war chest ready to be for us to be able to capture, these very exciting and very good opportunities coming up in the recycling space. So we are looking at increasing our recycling capacities and entering into the bottle-to-bottle recycling capacities in the north of India. So currently the management and the board is already working on finalizing the expansion plans. And as soon as we will be ready to roll out with, we would definitely do an announcement as well. Coming to your second question regarding the bottle-to-bottle recycling capacity, yes, the current capacity we have now increased our capacity from 14 to 28,000 tons. And there's another expansion that is currently going on as we are speaking of adding one more capacity of 14,000 tons in the next couple of months, which will increase our total capacity to around 42,000 tons by the end of this year.
Got it. So 42,000 tons of RPET capacity, which enjoys higher margins. We got that. Your debt, the last reported number, I think, was around 600 crores. Now you're talking about expanding capacity, but there's also some debt in your books. So what will the peak net debt levels in the books look like?
So we expect to remain the peak net debt levels around the similar levels, at least for the next expansion round. So the next expansion is majorly going to come from these the fundraise that we have done and the internal accruals. So more or less, the net debt is going to remain at similar levels.
Okay, so net debt will remain at similar levels. Got it. So can you tell us a little more about what the expectation is for FY25, both in terms of growth? I know you've said that it could be in this range of 1,600 to 2,000 crores in FY25 and margins of around 16 to 18% by FY25. Is that something that you would hold on to, and or perhaps you can build on to that as well?
Yeah, that's right. We are still in line with our expected, targets that we had given out. So we are still in line with that, and we maintain these exact same levels that you just mentioned. I think we are on line to achieve these targets.
The reason I'm asking you is because, both the sector has been facing a very difficult situation, the textile space that is, and you also have the exports which have particularly been under pressure, right? I mean, exports in the first half of FY24 have gone down over 30%. Any recovery that you're seeing in the export market at all, and how is the demand environment otherwise?
Yes, so there has been a little recovery in the export market itself, and particularly for us, also you are right that the general macro textile industry is still under pressure and it has started recovering now. For us, we are performing better than the industry just because of the fact that we deal with recycled polyester yarns and fibers, which currently being the strategy of many brands who want to now start utilizing sustainability as their strategic element. So because of that, we are still faring much better than the average industry's performance. And for us, we are also, what we've also done is expanded into a lot of value-added products, a lot of specialty products, specialized products, which are not available, or there's a scarcity in the market when it comes to them coming from recycled sources. So that is what has also allowed us to expand our margins and also maintain a healthy demand on our customer side.
Yes, no, I'm asking you about, I understand your comparison with your peers, but I'm trying to understand from a standalone perspective, the kind of fall that you've seen in the first half, is that something that will continue in exports in the second half? Any numbers that you can share with us on what the export growth, if at all, could look like in FY25?
We don't expect any material change in the export numbers. So to be honest, for us, we have balanced our decline in the exports with the domestic demand. And we think that currently the domestic industry is going to perform slightly better than the export industry for the next 1.5 year. And we think that the exports, they have slightly improved from the first half of 25, but they're going to remain at similar levels for the next coming up year as well.
All right, Yash, you're giving us a very wide range on revenues of 1,600 to around 2,000 crores for FY25. For FY26, I'm just looking at a note coming in from Antique, and they are talking about 1,900 to 2,000 crores for FY26 with margins of around 16.5%. Are those numbers gettable? For FY26, I'm talking to you, because FY25, you're giving us a very wide range.
Correct, Nigel. So basically, the FY26 number is also what is very, very, very achievable. So basically, our major expansions will be online this year. And it's all a matter of, how fast we are able to achieve the utilization levels, and hence the wider target, wider range that we've given you for FY25, basis on what level of utilizations and how fast we are able to reach. Once, we are at our peak or expected utilization levels, we'll be doing close to 1,900 to 2,000 crores of revenue, which will be almost flat for FY26, considering that, no new expansion plans, the new expansion plans would be coming from FY27 onwards.
Okay, so 1,900 to 2,000 crores and margins, because your B2F chips and your B2B chips as well will have better margins. So we should work with margins of around 16.5%?
That's right. Yes, sir. So they are a little better margins, and also as a strategy, we are also working to increase our margins on the recycled polyester fiber side as well. As I told you, I just told you that we are investing a lot in developing and marketing specialty products, value-added products, which were till now not available in the market with recycled material. That's what we have cracked, and because of that, we're getting healthy margins in our traditional, industry as well.
Got it. Yash, we'll have to leave it at that. Thanks a lot for joining us. By the way, the market is taking a turn for the worse, so don't lose sight of that. All four indices, Sensex, Nifty, Midcap, Bank Nifty, are once again in the red. The Nifty is down almost 50 points right now, all in a matter of, 5-10 minutes. Just look at that slide that we've seen in the last 5-10 minutes itself. But the worst of the lot is the Midcap index. So this was really the problem pocket for the market in the last few days, and caution has definitely set in. This is the first real signs of a correction in what has been a rollicking bull market in the last 1.5 years. But let's get straight to some of the brokerage views. Sudarshan is here with more details on that. Sudarshan, over to you.
So first, I'll talk about JP Morgan on ER&D companies. It says ER&D companies' growth has been relatively resilient compared to IT companies, and it has outpaced IT by 1,100 and 800 bips on organic growth in last 1 and 4 years respectively, and it expects outperformance to continue driven by large orders. It believes CY24 will be a year of growth recovery post the slowdown seen in CY23. Order of preference is Cient, LTTS, Persistent, KPIT Tech, followed by Tata Technologies. Next is CLS on autos. It says demand for CNG passenger vehicles is on the rise, and it will benefit Maruti and Tata Motors. It believes market share of CNG passenger vehicles will rise from 15% FY24 to 22% by FY30. It says growth can be attributed to the lower running cost of CNG vehicles and introduction of new CNG vehicle models. Last is Jefferies on EMS companies. It initiates coverage on Keynes with hold rating and Sirma with buy call, and it maintains underperform on Dixon Technologies and buy on Umber Enterprises. It says EMS Industries is estimated to post more than 35% CAGR, aided by China 1+ and lower labor cost. It says Dixon is 80% OEM mix, while Umber, Sirma and Keynes focus on components. It expects Sirma and Keynes to post EPS CAGR in the range of 55 to 60% with ROCE expansion.
All right. Thanks a lot, Sudarshan, for that. So plenty of brokerages actually coming out with their views. Let's take a quick break on that note. On the other side of the break, after the kind of volatile moves that we've seen in the market, we'll get you a conversation with veteran investor Ramesh Damani from the Rising Bharat Summit. Do stay tuned in for that. Well, speaking at the Rising Bharat Summit, veteran investor Ramesh Damani told my colleague Shireen Bhan that he remains bullish on India. He expects PSU stock prices to be even higher than at present. He adds that he doesn't see the markets being in a bubble, and he says that while there is always froth in the markets, it generally gets corrected. Let's listen into a slice of that conversation.
We believe that India is on a similar bull run. Like Japan went from a third world country to the second largest economy in the world. Companies that were unknown in Japan, 64, Sony, Hitachi, Honda, became household names. I think, and maybe I hope I'm right, that India is on a similar trajectory. And what is powering this bull market in India? Every bull market has a thesis. What powers the bull market? I think what is powering this bull market is the growth of the great Indian middle class. Finally, we're having a great Indian middle class. People have a bit of extra money to save, extra money to invest. So you're seeing that coming through in the demat accounts, seeing through in the domestic money inflows. So I think this is a long-term story. I don't think, as my friend Rakesh would say, always be bullish on this country. And the volatility that we're seeing right now is more like a winter squall. It'll pass by, but people who stand still will end up making a lot of money.
You know, given where valuations are, given the structural reform story, given economic stability, policy stability, so on and so forth, is that a bet that you continue to make?
Every bull market has leadership. So the 2000 bull market, for example, was led by the technology stocks in India, which saw the huge technology revolution taking place in India. I think what this bull market is partially being led by the PSU stocks, and they're saying that the level of corporate governance has improved in these stocks, that we no longer have the leakage, we no longer have the phone banking that India was so famous for in the prior bull market. So this sector, this PSU sector, will continue to lead this bull market higher. Now people sometimes say there's a bubble going on or there's some fraud going on, and they will correct, as all good bull markets have corrections in a period of time. But I think the eventuality these prices will be significantly higher than they're even today. And the reason for it is twofold. One, of course, the PSUs are the leading edge of the capex spend. The government is using infrastructure spend, defense spend, railway spend as a leading edge for capex. And plus the corporate governance is improved. And you're swinging the pendulum from ridiculously cheap to now probably overvalued at some point in time. But right now, they're good buys, even across the PSU sector.
You know, you talked about bubbles, Ramesh, and you know, there is a debate at this point in time whether in some parts of the market, some pockets of the market, we are now entering bubble territory. What's your take, especially as far as the small and mid-cap space is concerned?
You know, there's always froth in the market, and that corrects itself. Market is correcting. For example, there's some froth in the best private sector bank in India. It hasn't performed for 3 years. So the froth gets taken care of the market. I don't believe we're in bubble territory. People from Jamie Dimon to Jim Rogers have been calling for a bubble in American markets for the last 5 years, and the market keeps surprising them. NVIDIA becomes such a powerful company. I don't believe that's bubblish. There is froth. Market is taking care of that. And, you know, it's what the wise words were said to us when we first entered the market. Caveat emptor, buyer beware. We need, if you're going to put our money, we're going to put a wallet on the stocks, we should be careful about what we are buying. That is our job.
You know, speaking of white spaces, Ramesh, and I want to come to you with that. Outside of what we've already spoken of, which are the white spaces that excite you, where you believe we will start to see private capital moving in? And in terms now, we're you know, on the cusp of the general elections, in terms of the big ticket items on the unfinished reform agenda, what would you like the next government to prioritize?
Well, I think the Prime Minister said that better than I could ever say that in the conclave a few days ago when he said infrastructure, railway, defense, exports. All that's going to happen, I think, in the next generation of reforms, because the broad tax cut, GST, IBC, etc., this has all been done. So now we want to promote consumption, investment. Semiconductors, I'm not sure about that, but semiconductors also. But if you ask me for a white space, Shireen, Harsha was talking about, you know, we've already witnessed a tech revolution in India. I think we're not understanding, but a BPO revolution is coming to India, the kind of which will just surprise us, because real estate costs are so cheap in India. We are communicating at zero cost now with the rest of the world. So a lot of the back office work. In America, you have 3% unemployment rate, 3% unemployment rate. You can't find people at $20 an hour out there. You can shift all that work in India because communication and land costs are very cheap. So I think India will become, we already a tech superpower, will become a back office superpower. I think
but aren't we already the back office superpower?
You know, we've done nothing. We're just going to start. We're just barely getting started. I think we have focused more on tech, and I think not on high tech, but on tech, basic tech services economy. But I think the superpower in terms of back office will just explode. It's exploding before our eyes because the first time now land costs are zero.
Even in an AI world?
Yeah, I think so, because a lot of this mortgage processing, all this basic stuff, would still require some human intervention. So in the AI world, yes, that is a black box that I'm not familiar with yet. But I think given the other things that are taking place in India, a stable regulatory environment, low land costs, good communication ability, satellite communication available, I think that will be a big boom industry.
I was expecting you to, half expecting you, Ramesh, to talk about manufacturing, but you didn't bring that up. You don't believe that that's going to be the big opportunity as well?
No, I'm not particularly a fan of PLI investment. I don't think the government should be directing capital to areas where Japan tried that and it fell flat on their faces. So I'm more into the services consumption part of the Indian economy.
The expectation of a Fed cut coming in June, at least at this point in time, look less likely. What would be the external factors, the risk factors, Ramesh, that you would watch out for that could potentially impact us?
I mean, Shri, the world is a dangerous place. We are fighting two wars as we speak. While bull markets don't stop because of wars, that might surprise a lot of people. I think bull markets fall of their own weight. I mean, Japan continued to grow, but at some point it just peaked out and didn't come back for 40 years or so. So excess weight, leverage, there's nothing that the government, China's markets are trading 10, 12 years low. The Chinese economy has done reasonably well over a period of time. So markets, when the bad news, of course, Shirin, is that all bull markets end. Even this bull market will end, I guarantee you that. There has never been a bull market in the history of the world that continues on ad infinitum. So this will end too, which is fine. We'll hopefully be able to tell you on Bazaar when it's ending. But for right now, it seems like a green signal ahead. And bull markets will end up its own orgy, of its own speculative excesses. I don't see we anywhere near that at this point. I feel the markets are in decently good shape.
Let's talk about what we've seen happen as far as the IPO pipeline is concerned. What gives you confidence on that side of the story, and how do you see that playing itself out over the next few years?
I don't know much about the IPO market, to be honest. I rarely subscribe to IPOs myself. Secondary markets were offering great bargains, but I'll just add to the point that Harsha said. India's, when Neil Armstrong went on the moon 50 years ago, he said, it's a small leap for man, but a great leap for mankind. He was talking about the great step he made on the moon. I think digitization is a great leap forward. We're not understanding the full impact of what digitization meant. While I was coming in the plane, Shireen, I read this quote which said that in the near future, every product will be manufactured digitally and then physically. So that's a huge change that's taking place, whether in our BPO businesses, whether it's in our manufacturing businesses, whether it's in our country, in terms of delivering services to the corporate citizens. And India is amazingly, even as I speak to you, a leader in digital services, UPI, Aadhaar, Paytm, whatever. It's extraordinary what strides we made in the last 5 years in digitization. So I think there's one theme you want to latch on to this thing, it's digitization.
On the unfinished agenda, will it matter, for instance, if the next government were to do bank privatization or not? Asset monetization, big pipeline had been laid out. We didn't deliver on that front. I mean, I'm asking from a market's perspective, what will the market factor in terms of expectations or asks from the next government?
I mean, there is some expectation that the government will privatize a lot of its assets. The government has publicly said that. They will do that. But I think more important, we want good corporate governance. We want less corruption, less leakages, which I think this government has already delivered. If they do extraordinarily good privatization, like IDBI Bank is up on the block, if that is done in a fair, transparent manner, I think the market will be extremely enthused by that. And I think that depends on the majority that this government gets finally. If they get a good majority, I think they'll be able to put some thoughts through Parliament, which other governments could not do because of, say, paucity of numbers.
Like what? What would the number one priority on that front be? What you would like them to do?
No, PSU privatization theme. I'm saying if they actually take that to the next level, the government has said that other than strategic defense and space, they will privatize all the PSUs. Yeah. It makes sense to me. But more importantly, is the first step they've taken is to improve the corporate governance. I mean, the corporate governance improved dramatically in those PSUs. So that has enthused the market first on. That will actually be the icing on the cake.
Eicher Motors surges more than 4%. The top Nifty gain after brokerage from UBS upgrades the stock to buy from neutral. Hikes the target price to 5,000 from 4,300, citing a compelling risk-reward scenario.
Recent listing GPT Healthcare surges after reporting strong profit growth in Q3 FY24, even as margin declines. The stock is up by close to around 5%. The management spoke to CNBC-TV18 and gave us a solid guidance for FY25 as well, with revenue growth of around 15 to around 18% and some improvement in margins as well.
Shakti Pumps corrects after it's launched a 200 crore rupee QIP. The floor price is set at 7% discount to yesterday's close. The board will meet on the 22nd March to determine the issue price.
Indus Star surges on prospects of a stronger balance sheet for Vodafone Idea as ATC Telecom converts its 1,440 crore rupees of debentures into equity. The stock has also entered the F&O ban list today.
Tata Chemicals is the other one, which is down 8%. The stock has exited the F&O ban, seeing cuts of around 8% after a big rally that we saw a couple of weeks ago.